What is up, you guys? This is Efren from Relentless SocietyZ Trades. This is going to be a simple video for you guys, and like as you guys read the title, it's how to read the charts for beginners. Pretty much we're going to go over what the chart is, what we do as traders, and what a candlestick is, and explain it just in case you guys don't know if you want to embark on this journey. Argumentatively going to be the most simplest and easiest video to really understand what trading in the market really is. So let's get right into it. Alright, welcome back, you guys. So what is trading? Trading is really much a buying and a selling. For every sell or every buy, there's an equal opposite. So with the buyer, there's a seller. With the seller, there's a buyer. Pretty much simple. What we do as a trader is we're taking an educated guess, or better said, an educated prediction of where the market's going to go. How? Well, that's simple. We have our different strategies, our edges, which I'll go over a little bit more after. An example will be the market shows that a bullish momentum, and I'll be going for longs. And now if it's bearish, I'll be going for shorts, which those terms we'll go over later on in the video. Trading is pretty much 100% a performance-based game, meaning the earning potential is unlimited. It's not capped. You can't make just 100,000. You can make whatever you want. But the most important part about it is managing your risk, how much you're willing to even risk to make the money that you want. Now, going into more in-depth of trading, you have different markets. We have of crypto, we have futures, we have options, and Forex. Pretty much simple. Forex is currency, USD, JPY. Options, you got SPY, Tesla, Apple, any company you really much think of in the US, they're pretty much going to be there. Now, futures is now indices, meaning like the market as a whole, eggs, milk, stuff like that. That would be in futures. And crypto is what you guys would know as Bitcoin, Ethereum, etc., etc. Those things will be under that one. Now, when you go into terms that we know as traders, we'll be looking at the following, which let's go break that one up. All right, so going into the terms and breaking down what terms are, let's break down the first one, longs. So longs is pretty much you're looking for an entry of going up. So if we go to this screen right here, the market's on a bullish momentum, so it's looking like this, and we're looking for longs. That's that the market's going upwards. Now if we're looking at a bearish momentum, we're looking for the market to go down. Now we have longs and shorts. Longs is that entry, let's say right here, and we want that market to go up. Shorts would be we get in here, market going down. Now going back to this screen, we have bullish and bearish. What is bullish and bearish? Let's go back to that screen. Bullish and bearish. Bullish is that entire market going into an uptrend. It's not really that you're a position you're going to say I'm getting bullish. No, you're going in longs on a bullish market. So what is bearish? Bearish is that whole market going as a downturn. As that period in time, you see that the market is bearish. So you'll be going for that bearish momentum. So shorts, an example, pretty much simple. I'm going to go ahead in shorts on this bearish market. Pretty much easy to really explain. Now, an example of these terms, like I said, would be looking for bearish on NQ. The market's looking bearish, better said. Market's looking bearish on NQ. We'll be looking to go on a smaller time frame for shorts. An example of this would be looking bearish on NQ. We'll be looking to go on a smaller time frame for shorts. Now, time frame, so to understand what time frame is, it's very easy. It's used to understand the different time frames we use, as well as understand that each time frame and candle has a story to tell. Meaning the 1 hour is not going to be the same as the 5 minute. The 1 hour is going to have one big candle. 5 minutes are going to be broken into 12 times to make that one candle. Now, the way of really going about and explaining what that candlestick looks like, what that time frame looks like, it's fairly easy. I would study my levels on the 4 hour and do my entries on the 5 minute time frame. Letting yourself know, hey, I might chart this time, and I might chart as well on the 1 hour, but my entries are on that 5 minute time frame. To break it up for you guys a little bit better, if I go on a 4 hourly, alright, if I go on a 4 hourly, on a 4 hourly here, and I go, let's say this small area right here, and then I go on a 5 minute, or let's say I go on an hour, I look at the market, let's say for an example, boom, boom, I'm going to wait for this rejection right here. I like that rejection. I'm going to look for longs. Let's go in a 5-minute time frame and look how it's looking. Okay, we rejected here. That's now I'm going into a smaller time frame to see that market, to see what's going on, so we can have more of a story, so we can have that better prediction of where the market's going. Now going back over here. Now a lot of people wonder, what is a job as a trader? What do we do as a trader? The first thing you need to understand is that you're always going to be 50-50. You're never going to be 70-30, 80-20, 40-70, 40-60, whatever the case might be. That never will happen. It's always 50-50. Either you're right or you're wrong. What I would recommend doing from the beginning is having accountability. Have an accountability of what's going on in the market. If you took that trade, that is your mess up. That is not the market. The market doesn't owe you anything as a trader. You're taking the opportunity to even get in because you think you saw something that could be there, could not be there. It's pretty much on you. If there's bad price action, you shouldn't be trading from the beginning. Now, what is our job as a trader? It's pretty simple. Predict where the market is going and how we can take an entry upon that so we can make our money. That is the most easy and simplest answer as a trader. The different types of traders. A lot of people don't understand that there's different types of traders. There's a long-term trader, short-term trader, day trader, and scalper. The differences is where or how they trade. A long-term trader is going to be someone that's more looking at a wider span of it, looking to have like holding Tesla for 5 years, 6 years, and a year. Short-term trader is someone that's looking at a weekly, maybe couple days, 3 days, holding that trade. A day trader is holding it nothing longer than 24 hours. And a scalper right here, scalper will be someone that doesn't hold it longer than about 2 hours, an hour at most. One more time, day trader is daily, scalper is hourly, mainly minutes. We're in and out quickly. Now you may ask, well, Efren, how would I understand how to read the market? So that's where we come to this part. We have edges and strategies. Pretty much simple. What is an edge and what is a strategy is how you read that market. What I would always recommend to everybody, which we'll go over right here, right under it, is how to find it, and we'll explain that after. Now, there's a lot of different strategies out there. I'm more myself a breakout trader. I stick to my breakouts. I do use trend line sometimes, SMC, or even ICT. Those are all strategies that I would always recommend. I would definitely recommend you to do your due diligence and look up what are the difference of them. So that way you have a more understanding of what is what and how one works and how does the other one work. So breakout trader, you have an ICT trader, you have a trend line trader, SMC, and support and resistance. All different ways of trading. Some people like to put them with others. You're always going to end up making your own strategy. Everybody's strategy is a little bit different because nothing works the same. Now, how can I find my strategy? Like I just said, there's plenty of ways to find that strategy or edge. Best advice, like I put right here, is scroll to Instagram and looking up the different name. Again, this file will be on the download, on the description for you to download. My videos, like I told you at the beginning, will be about breakouts because I'm myself a breakout trader. I do use some support and some resistance and some ICT depending on the time frame that I'm trading at. So let's break that right side of the screen. It's going to be pretty much easy, and let's get right to it. So what is a candlestick and how does it work? Pretty much very easy, very self-explanatory. Candlesticks are things that move the market or even explain what the market is, the price action of where it's going. Each candle has a story to tell upon or where it's moving. Meaning, if the 5-minute candle is moving up and then down and then up, on the 1 hour, it may look just one small candle of a body stick. That body of the candle might be really small. But on the 5-minute, it may look like it's going up and down, up and down, up and down. That is just how it says or how it looks on the different time frames. Now, there are 12 5-minute candles in a 1 hour candlestick. Candlesticks will always determine the price action. Meaning, we'll be looking at candlesticks. But what moves it is market makers, news, and stuff like that would be the whole price action. Now, what is a candlestick? Okay, pretty much very easy. So let's look at this picture that I have here. This is a red candlestick, a bearish, and this is a bullish candlestick. Now, I don't really like to say red or green because one person might have a candle, the green candle is blue, purple, green, whatever, and one person might have it different. Mainly, the market going downwards is a bearish. Market going upwards is a bullish. So, looking at the candlestick, what do we have? We have the high of the wick, all-time high, body, opening on this bear's candle, closing of the body, and lowest point of the wick, meaning that's the lowest point that the candle made or went before closing, just like the highest is the highest point before reversing and going down. Now the bullish candle, what changes? It's the opening and the closes. They flip. Now instead of opening up here, we're opening down here and closing up here, with the high being up here and the low being down here. That stays the same. Candle stays the same in the sense of where it's going. Now we open here. If this candle, let's go to this screen. Now we're looking at this candlestick, right? And we see we opened here, closed here, opened here, closed here, open here, closed here. Pretty simple. The wicks are pretty simple. Before this candlestick went to the red side, she moved up and then came down and started falling, continued falling, rejected some type of level, and came back up. And by the time that candlestick closed, it closed right here. Same thing here. This candlestick, when it opened, fell, or it could have gone up and then fell within the time frame, and then went all the way up, pushed, touched something, fell, and by the time the market closed, or not the market closed, but the candlestick closed, we stayed right there. Same thing goes here. It's pretty much simple. Let's go take a look at a quick candlestick right here. Look at what we have here. Candlestick open, candlestick closed, candlestick open, candlestick closed, candlestick open, closed, open, closed, open, closed, open, closed. No, sorry, open, closed. I really don't like that one because the market's a little choppy there. Let's have it better here. Look, this one's a lot better. So we have red candle, opened right here, closed right here, open right here, closed right here, open down here on that green candle, on that bullish candle, closed, open, and then closed. All right, it's pretty much simple. Going one more time, very important to understand, every candle is a range. An example, 1 hourly is an hourly range. Now, when we talk about the open, let's go through these terms to break it down one more time so you can get a hand-on understanding. Opening. The open is where the candlestick open. On the red candle, we're going to go ahead and take a quick test here. All up to you guys, right? I'm going to put the line. Boom, 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 boom. I'm going to give you guys about 5 seconds. I want you to tell me what this side is. I want you to tell me what this side is, what this is, and what this is. Where's the open? Where's the close? I'll give you guys about 5 seconds. All right, beautiful. Now, if you said that the market closed here, correct. And if you said it opened here, beautiful. If you said it closed here, correct. And opened here, you're on point. You're honestly understanding what's going on. And that is beautiful. So let's continue. Back to the screen. Now the close, highest point. The highest point of the candle is those wicks where the candlestick highest went before rejecting that level and coming back down, or going all the way down and rejecting and going all the way up. That is what that candlestick highest and lowest point. All right, so that green and red candlestick, let's break these two terms down. So that green candlestick is going to always stand for bullish, market going up, bullish. We'll do bullish. The red candlestick is that reverse, which is going downwards, always going to be going downwards, bearish. Both start with B. It's going to get a little confusing, but start understanding it. Like an example, the bull, when the bull rams, it goes up, and when the bear eats fishes, it's going to go down. So we're going downwards. So we have that bullish and bearish momentum. Bearish going down, bullish going up. All right? So that's pretty much it. Always, it's going to be pretty much easy as you guys go forward with reading the market. When you guys are beginning, it's going to take time. This is not a journey of trying to make money, who makes more money, none of that. It's going to be taking your time and moving slowly to that goal that you're looking for. Take your time, you guys. Don't sit there and try to make it overnight. We all want that one trade. It will not happen like that. It could 100%, but take your time with the trading so you understand what you're doing, where you're going, and what you want it to happen, or where your goal is to go with it. So with that being said, this is Efren from Relentless Society. Love you guys. Be safe, and I'll catch you on the next one.